Hi everyone, it's Joe and Diane with Tips on Pips. Hey Diane.
Hey, Joe. Good to hear your voice.
All right, lesson number 5. Once again, all these I think are really important. This one's a little bit obvious, but I think it's still important. And the gist of it is it says in bull markets we need to be long, and in bear markets we need to be short. What about that, Diane?
Hmm, you're right. It sounds so obvious, it's painful to even have to describe.
All right, so let's take a look at this chart really quick. And it's a euro and a zine, and it's the daily. I've drawn a horizontal line here and it's going up. Tell us about that.
It was clearly going down before it flipped, and that's the trick. Is we never know when these directions are going to change, Joe. And so when it starts going a different direction, we want to cut our losses and get going with the direction of the trade.
Okay, so another thing is that it says traders go, yeah, it's obvious. I mean, he pointed out to a second grader, is the common saying, and ask a second grader which way it's going, and they can tell you exactly what the trend is. Talk to a guy that's been trading 2 years, and it's if, ands, and buts. What about that?
If ends and buts about directions, then I guess my first question would be, what is the time frame you're looking at? I'll tell you a secret of mine, Joe, is I tend to look at a weekly and a daily to determine a trend. And then I trade off of the shorter term time frames, but I really like to understand what the direction of the trend is doing on the longer term time frames before I jump in. You can't just look at a 5 minute or a 15-minute chart and think you have a real clarity on which direction it's going. There's enough surprises for you coming on a longer term time frame. So that would be my instruction, is to really understand from a longer term perspective what's going on with the chart, then narrow it down to the shorter term time frames to make a basis for your trade.
You and I last week were talking about a post that you saw on Facebook where this poor trader posted he's blown up his third account. And in my mind, it went through maybe he was counter trend trading or not following the trading plan. Is this a lesson that you have to learn? And what happens if you never learn it?
Well, if you never learn it, then you're not ever going to have an account that stays intact. But I will say that any experienced trader that's been at it for any period of time knows what it feels like, if not to blow up an entire account, to lose miserably by counter trend trading. It goes back to the trade that looks really good because it looks like it's reversing are usually always the really bad ones. So stressing for people that go in the direction. Joe, look, if you want to float the river, are you going to try to float it from downstream to up? And as simple as that sounds, I am a river floater being from central Washington. We always go upstream, throw the inner tube in, and ride it down. It took me way too long to learn this one. It sounds so simple. It's not. But think of an inner tube in a river, Joe.
Okay.
Go with the trend.
All right, good. Well, to me, it sounds like what you're saying is you're saying, look at the trend, go with it, set an appropriate stop, don't try to fight it. And the poor guy that was trying to fight the trend, if we look at this uptrend, was going really negative. And if we refer back to a previous lesson, we talked about adding to a losing trade and making the situation worse. Okay, well, thanks, Diane. And we will wrap this up. And the key point here is once again, the trend, don't fight it.
Thanks, Joe.
Bye.